What up, Hyperchange? Welcome to another episode. Today we're going to be talking about Netflix in 2028. I'm going to be doing my best to analyze what the company's financials, valuation, and business model will look like 10 years into the future. This is one of the most fascinating companies in technology. They have entirely reinvented the media landscape. Disney, one of the largest legacy media titans in the entire world, recently announced they are replicating Netflix's streaming direct-to-consumer model and pulling all of their own content from Netflix. Yes, this is going to hurt Netflix, but it also validates that the future of the industry is headed into the business model that Netflix has pioneered. And I think the company isn't just going to stop at streaming. I think Netflix has original content ambitions that are going to lead them offline into the real world, just like Disney has done with their theme parks and their merchandise. And these are going to be the stepping stones of how Netflix gets to a market capitalization of several $100 billion. The next decade is going to be incredibly exciting for this company. So I wanted to take a peek behind the curtain and let you guys know what I think is going to happen in the next 10 years. The first thing that Netflix does so well is their streaming service. You probably spend way too much of your time watching Netflix's original shows. Originally, Netflix was pulling in content from all these other different producers, providers, licensing it and putting it on their platform. But more recently, about 5 or 6 years ago, they started funding and developing their own original content. You see these all over Netflix's platform. They're called Netflix Originals. Some examples of these: The Crown, House of Cards, Narcos, Stranger Things, all of those comedy specials you see. These are all exclusive programs that Netflix has funded and owns the distribution for. Another really crazy piece of original content Netflix just put out was a show with David Letterman, very similar to his late night talk show that he already did on the cable networks and was such a hit with. But this is filmed in Netflix style, a little bit of its own flavor. And uniquely to Netflix, they're not just dropping a whole season at once, they're putting out episodes incrementally, more like a real TV show, and they're also more current event related. The tentacles of Netflix and their original content strategy flow into all these different categories. This is something we're only going to see continue in the next 10 years. And what's so brilliant about this original content strategy is that the company gets all of this IP around the characters and fictional worlds where its movies and TV is taking place. This is exactly what Disney has done with all of its characters and brands, which leads me to my next big idea of what Netflix is going to do to monetize toys, video games around the intellectual property they have around their original content. Yes, I'm talking about Stranger Things toys. And if you take a look at Target's website, what's crazy is there are already a ton of Stranger Things merchandise and toys. And in early 2017, Bloomberg even reported that Netflix was hiring somebody to expand their merchandise and toys effort. I mean, this is a no-brainer, a strategy that Disney has pioneered and executed so well. Netflix is copying them, and we are going to see them layer that on top of their streaming business model. What is potentially even more exciting is the theme parks and resort business. That's right. I think in the next 10 years, Netflix is going to launch several theme parks around its original content. Think Stranger Things, think House of Cards. They're building up this massive portfolio, which I think they will eventually leverage into creating these real world experiences, whether you're going into a room and putting on a VR headset and experiencing the world of Narcos for yourself in the first person. These are just a few examples of the ways that Netflix can go. It's all additional monetization around their IP, and that is why when you're looking at Netflix as a company, it's so hard to value them because you're only looking at the streaming revenue, and that alone I think is poised for mega growth. But additionally, there's all of these untapped growth avenues. Let's get into the streaming business. Before we get into how big I think the streaming service could be in 5 to 10 years, let's look at what it looks like today. So Netflix's total revenue is about $11.7 billion this year based on management's guidance. This is up from $3.6 billion just 5 years ago. As a compounded annual growth rate, this represents about 27% in the last 5 years. This is important. I wanted to back out the DVD revenue that we were seeing from Netflix because I think that's, dying. And so if you take that out, you can see that Netflix's streaming revenue growth has been even more impressive. And without that DVD sales, streaming revenue alone has compounded at a 35.4% compounded annual growth rate. The bulk of that reason is because they have rapid growth in the amount of memberships that are on their platform. Netflix has scaled from 24 million memberships to 116 million in the past 6 years. This is a 30% compounded annual growth rate. Then I was thinking about, okay, let's try and extrapolate this. Netflix's streaming memberships are projected to grow about 23% in 2017. So I just sort of linearly stepped down the growth rate every single year, 22% next year, 21% the year after that, until we got got to 12% growth in 2028, which led me to 650 million streaming members in 2028. And although this sounds crazy, it's only 8% of the world's population, or what it will be in 2028. And just to put things in perspective, about 16% of the US population has a Netflix account today. So I think this is really reasonable. If Netflix retains their dominant position in media, kind of a fair trajectory. I mean, of course, it's a guess of what their streaming business can do and how big the market is. What's even more fascinating, though, if we get into revenue, is that Netflix's average revenue per year per streaming member has actually been rising. And this is because, as you may have seen in the news, Netflix continues to raise their prices. That's another huge part of Netflix's business model. I think they're giving so much value to consumers. They're undercharging for their service. I think they're gonna be able to raise prices for years and years to come consistently, and it's not gonna result in much churn. The average revenue per year per streaming membership has gone up at about 5.5% for the last 5 years. I kind of sort of extrapolated that growth rate here, and I sort of have a bigger jump from 2017 to 2018 because they had those price hikes in mid-2017. The effect of that is gonna slowly carry over through next year. So after a $9 increase in average revenue per year per streaming membership, I kind of projected to slow down to a $5 per year increase out until 2028. Now, if we multiply the total number of streaming members times the average revenue per member per year, I can get an estimated revenue trajectory of the streaming business. As you can see, the growth is phenomenal. I am projecting that Netflix will be able to scale its business from 2017 to 2028, going from about 11 billion in streaming revenue to over 100 billion in 2028 annually in recurring software as a service revenue. A behemoth in the making here if they execute. The market is massive. Only more and more people are going online. Netflix's content and service just keeps getting better. I don't know if this is realistic. We're gonna talk about risks later, but that's what I have right now. Consumer goods and interactive media. This was a really tricky part of the business to estimate. I have no idea. Netflix has no details on the size of its merchandise or accessories business today. They just started beta testing it this year, I believe, but I kind of did my best to ramp this out. And as you can see in the spreadsheet, consumer products and interactive media segment, which I have scaling from about 200 million in revenue in 2019, the first year I think it'll get material, to about 8 billion in 2028. Disney did about 4.8 billion in this same division in fiscal 17. So I have Netflix getting to the size of Disney today in about 2024, 2025 timeframe. In terms of operating margin, Disney is posting about 36% on this division. So I have Netflix starting way below that, and then trending towards that number as they scale the business in the late 2020s. Moving to the parks and theme parks and resorts business. This was also super hard to guess. There is no details about whether Netflix will ever put out a theme park. They've never said they're gonna do this. Nobody has blogged about this happening, but I 100% think it won't look like the Disney theme park. It may just be a massive room where you put on a VR headset and walk around, but I think it's inevitable that Netflix starts to build out real world experiences. One of my buddies just stayed in a Stranger Things hotel or something where he drank the same cocktails they were drinking in the show. I think that is only gonna ramp up more and more, and that is the theme parks and resort business. This has mega opportunity, but I'm just so skeptical about it, and Netflix has never talked about it, that I try to be conservative. I have the parks and resorts business starting in 2021. I only say they have 0.5 parks open because I think they're only gonna have a park open in the back half of the year. From there, they scale it pretty consistently, but what I think is interesting to note here is, Disney has posted this year about $18.5 billion from their parks and resorts business. They had an operating margin about 20%. I'm assuming that in 2028, Netflix's parks and resort business has the same margins as Disney, but is still smaller than it is today. I just think it's gonna take a really long time to build out a parks and resorts business that's the scale of Disney's. And I'm gonna link to this spreadsheet so you guys can check it out for yourself, play with it, download it. When you add this all together, the operating profits of all these segments, along with the revenue, I have them scaling from about 15 billion in revenue in 2018 to about 127 billion in revenue by the year 2028, which is just insane. I believe this could drive Netflix to a valuation of $500 billion. That's about 1,000 per share, assuming a little bit of dilution with 500 million shares outstanding. So this values Netflix at 1,000 a share. With my assumed financials, would be trading about 3.9 times sales, about 23 times price EBIT. Netflix today is trading at about 8 times sales, 100 times EBIT. I'm assuming a dramatic contraction in the company's valuation multiples as they get more mature, and that's I'm factoring this all in. I also want to point out though that Netflix is on track to lose between 2 to 2.5 billion this year in free cash flow, despite, guiding for positive operating earnings. This because they're investing absurd amounts in CapEx to be able to build out more and more original content, which they then amortize over time, but they need the cash up front to fund that content. For now, Netflix is in a really interesting position because they still are reliant on the capital markets, on debt, on selling equity to be able to fund their original content strategy. This brings me to my risks. Amazon is already on track to outspend Netflix, and this gap is only going to widen, not to mention the fact that Disney is coming out with their own in 2019. But I just think the future is, instead of buying $100 for cable, you'll buy $20 worth of Netflix. You'll have Amazon Prime, which is all your other stuff. You'll have $20 on Disney. You'll have $10 on Disney's ESPN. And you're spending about $50, less than you would for cable, but you probably have more, better, more amazing content. With all these content budgets skyrocketing, we may eventually be getting to the point of a content bubble. Like, eventually these companies are just going to be paying so much for content, it's got to hit a wall at some point. People can only watch so much TV. I don't know if that's going to be another factor at play, but I also think a potential content bubble is on the horizon if this growth rate in spending keeps up. You just are like, okay, I'll cancel my Netflix because Amazon has enough good stuff to watch. That is really the bear case here. I want to end the episode with a few potential acquisitions out there that I think could be epic for Netflix. The first one is a clear, obvious, get more mini content studios like Millar World or Miller World, buy more comic book companies, partner up with tiny film studios who are producing amazing stuff. The ball on that is just going to keep rolling, and we're going to see Netflix acquire all these tiny little content creators. Also, I think that Netflix could acquire a VR company to either launch a proprietary VR headset so they can have VR movies and content, or more generally, a startup that can help them kind of create their content in a VR world. Producing a show like Stranger Things is one thing for a 2D screen. Producing a show like Stranger Things for a VR world is totally different. That's a very difficult technology to master. I wouldn't be surprised to see them make an acquisition there. I also think the idea of having a VR headset while you watch Netflix and then selling the physical VR device, kind of like Oculus, is definitely on the table. Additionally, I think they could buy a toy maker. They're already making all these Stranger Things toys with a company called Funko that just IPO'd. Funko's kind of garbage. I looked them up. They have absurd amounts of debt. They're a fascinating little company, but not much, proprietary stuff going on. Them buying a game maker could be a very interesting move to accelerate their plans of consumer goods and merchandise. Along those same lines, I think if they bought a tiny video game studio who could help them turn these amazing movies and TV shows into video games, could also be a huge win and a really fascinating tuck-in acquisition. Lastly, there's a Canadian microcap called D-Box Technologies, which makes these crazy seats where you watch movies and they kind of the seats move with the movie to make it think you're in the movie. This technology paired with a VR headset could be the future of super premium theaters or super premium in-home viewing experiences. So I think Netflix could acquire D-Box and somehow integrate that. So that wraps up, all these crazy moonshot ideas I have for Netflix. I think this is an unbelievable company with so much potential. They're led by one of the most visionary founders and entrepreneurs and CEOs in the world right now, Reed Hastings. There's no telling what he is scheming on next. If you guys have any ideas, comments, or questions, leave them below. See you guys next time. This is Hyperchange. Peace.